What is up, my Forex for Beginners family? Okay, so today we're going to be studying average true range. What the heck is average true range? I actually haven't used average true range in a little while until recently, and I applied average true range to my charts, and I kind of had a wow or a aha moment. And so I thought it'd be the right time to introduce it to you guys. And it affects our stop loss. So average true range, in another sense, it means how volatile the market is, or volatile means how much is going up and down. See how it's going down and up? It's actually measuring the average true range. So it's actually doing a calculation and is taking all of this data and is telling you what the average true range is. And in our previous lessons, I advised you guys on the 4-hour time frame that we were trying to target a 20 pip stop loss, right? But like I said in the training, our stop loss has to adjust with the market. And right now, and I'm going to show you, we're in a different time right now. We're making history right now. Sadly, it's kind of a scary type of history. The stock markets are crashing, and the coronavirus is spreading quickly, and it's going to overwhelm the hospitals, and then more people will, unfortunately die. It's a serious deal, and I'm sure we're all going to overcome this. But right now, you can see the markets are crashing, and they're crashing for a reason. The Australian dollars did a lot of business with China, and the U.S. is really, they're lowering their interest rates because they're worrying about the economy is going to crash, or it's in the middle of a crash. So in the previous chapters, we talked about trying to find entry or a trade entry with a stop loss of about 20 pips. But what I'm going to show you here is this will help us to adjust to the market, because right now we're in a different time right now, and the markets are moving more. Moving more just means more trade opportunities. What I want to teach you guys is get in the habit of, there's swing trading, and then there's day trading, and then there's just, I like midterm trading. Everyone's schedule is a little bit different. So everything I teach you, you need to use what fits into your daily lifestyle and how much time you have, and kind of you guys need to start a trading journal. Write down, when you enter a trade, write down why you entered and what was the result. And then after, try to reproduce that same setup. And that's just one strategy. And then so you keep making new strategies, but start documenting your trades in a trade journal. Anyways, back to average true range. So this is going to help us adjust our stop loss. Okay, so yeah, adjust our stop loss. So if we go over here, this is how I find it. Indicator, so this little F with an X is indicator and strategies. Indicator, and then I already have it under favorite. See, under favorite, but you're probably not going to have it here. So just, you guys type on search, just click on search and type in, let's type in ATR. Let's see what comes up. Yeah, okay. So type in ATR and average true range will come up. And then just hit this little favorite button, and then it'll make it a favorite. And I already have it as a favorite, so I'm just going to click on average true range. So when you apply it to the chart, let me just check my settings. I believe my settings, this is how you access the settings. So you just go over here and set to RMA. And 14 is the length. So this is just the standard inputs. We're not going to change them. We're just going to leave them as is. So what I want you guys to see is I want you to move your mouse cursor over here, because now we're everything is telling you here the average true range. So we're on the daily chart right now. Now I'm looking at the date here. So January 16th, 2020. Right? It was we just had Christmas. Yeah, everything's doing great. January, we started hearing, unfortunately, about the coronavirus. But before that, so in January 2020, look to the right here. So I'm going to move my mouse to here, but it's saying 401. So essentially that is 40 pips. So that is 40 pips. That's how you read that. So 401 is 40 pips. So this is telling us the average range, so ATR, average true range, during January was about 40 pips. And that was good. That's why, it's telling you that it was ranging up and down, 40 pips. We should be able to find decent setups on the 4-hour time frame with a 20 pip stop loss. That was the strategy. However, let's take a look at what's happening now since the coronavirus entered the picture. So let me so we were down here, we were 40 pip, see on the far right there, bottom right, it says 401, bottom right. We were at 40, so 401 means 40 pips, so you can just remove the last digit. So 40 pips, we were setting a 20 pip stop loss. That was our strategy. But now, since the coronavirus hit, the markets have been more volatile or wild. You're seeing larger price movements. So see how we went from 40 pip average true range. Now we're at, let's see the peak. We went from 40, so right now on the right there is showing 1696. So that is 169 pips. Okay, so I took a second here and I wanted to actually wrote out the comparison of the ATR before COVID-19 and now. Like I said before we were looking at the daily ATR, and this was previous to the coronavirus. Our daily ATR was average true range was 50 pips. So then I went down to the 4-hour and looked at the ATR, and the average was about 25. And then on the 5-minute, the average true range was about 5 pips. So what I was doing, because it's called average true range. So if you go look at the ATR on the 4-hour time frame, and that's where majority of us were studying the structure. I've been teaching structure on the 4-hour time frame. What I was doing is because it's an average, I was going to the higher time frame, and that would account for all the lower time frame average. And so I was using the higher time frame, and on the higher time frame on the daily, it was showing me approximately a 50 pip average true range. So what I was doing is, this is what you do to determine your stop loss. So what I was taking the daily ATR, dividing it by 2, and using that as my approximate stop loss on the 4-hour chart. So if you look down here, stop loss equals 1 or 1.5 times the ATR for that time frame. So that's one standard people use. So you can either go to the individual time frame, look at what the current ATR is, average true range, and multiply it by 1 or 1.5, and that would be your stop loss. Or what I was doing was I was using the higher time frame, daily average true range, dividing it by 2, and I was using it on the 4-hour. And that's what I was teaching you guys to, look for setups, mark up the higher time frame. And then I was teaching you to look on the 4-hour and look for opportunities for about 20-25 pips stop loss. That was the strategy. And that strategy will continue. But now that, we're in COVID-19 world now, and the markets are more volatile, if you look at the ATR for the daily, now it's 150 pips compared to 50. So it's moving a lot more. And on the 4-hour, it's about half that, so 75. So the 4-hour is showing us that it's, there's a big difference between 75 and 25. So we're seeing, and then if you look down to the 5-minute, before it was 5 pips stop loss was great on the 5-minute time frame, but now on the 5-minute time frame, it ranges between 5 and 20 pips is now what you see on the 5-minute time frame. So I don't want, like I said before, I don't want this to scare you guys. I just want you to realize that the market is moving a lot more now, and this is why we're going to keep studying the 3-chart setup, because we want to base our trades off the higher time frame, but we want to practice entering with precision, and that requires us to really enter on the 5-minute and 15-minute time frame when we're doing our entries. You can, like I said, if you want to trade the higher time frame like the daily chart, but remember, your stop loss is going to be potentially 150 pips, which is quite large. So now that we're, again, in the COVID-19 world, I'm just saying there's going to be more trade opportunities. So don't let this scare you. This just means the markets are more volatile, and actually traders love when the market's moving more, because it means there's more opportunities. So as all of our schedules vary, all of us has different schedules. So now that the market's moving more often, that means when you end up sitting down and looking at the charts, there will be more opportunities for you to catch some pips and exit. So that's what I want our strategy to be, to, look for setups, catch our pips, get our money, and get out. So that's going to be our strategy. So I'm just going to quickly go through the daily ATR. So I'm just going to delete these lines here. So on the bottom here is my average true range. And so since we're on the daily chart right now, up here, daily chart, you can just take a horizontal line. And right now, at this moment in time right here, our ATR is, let me see, we're at 158 pips. So if you were trading on the daily time frame and you saw an opportunity, if you follow this rule, your stop loss should be 1 or 1.5 times ATR, which it's pretty large. But that's what swing trading is. Swing trading is, this right here, this could have been a swing trade. 1 second, let me get my little tool here. So say if you were trading the daily time frame, you saw a 3-pin formation, and I'm going to go over this in the next chapter, but say you were going to trade this, bullish formation, 3-pin formation. Well, based on the ATR, it's moving about 158 pips. Your stop loss potentially may have to be 158 pips or more. So let's just measure how large this is. That's actually 302 pips. So, but if you used, say you use what we said, say 1 times ATR, and the ATR is potentially 150 pips right now, based on the ATR. Let's just use 150. Okay, 153 is close enough. So say off of this bullish engulfing, if you had a stop loss that was 150 pips away, look at that. You would have been, if this was your stop loss and this was your entry off of this bullish engulfing, let me get my arrow. So if your entry was off of that bullish engulfing, we entered here, you used a 153 stop loss, pip stop loss based on
the current average true range, then you would have been successful. See this wick that came back? It wouldn't have caught your stop loss. See that? That's how you use ATR. Because the average true range right now is 158 and you used close to the rule 1 or 1.5 times ATR, you would have been safe. Look, the wicks did not touch your stop loss and you would have been in profit. Let me see how many pips profit you would have made if you traded this. Say we exited here. That is almost 400 pips. So you risked 150 pips to make 395 pips. So that's how you use ATR on the daily time frame. But again, this type of opportunity doesn't come along very often, because last time this opportunity happened was, many days ago, or on the daily time. So yeah, you can trade the higher time frame, but the higher time frame involves waiting longer, so more patience, plus a larger stop loss. So that is one strategy, but that's why, a lot of people don't wait around for, these long wait opportunities. They want to trade the lower time frame because there's more opportunities. So in the next couple of lessons, we'll talk about the lower time frame and how you can use that to your advantage. But for now, I wanted to explain to you what ATR is, how we use it. Every time frame has its own ATR. So right now I jumped down to the 4-hour time frame. And let's look. See how there's a range here? We're on the 4-hour time frame, but there's still range from here. This is 111 pips to right now it's 60 pips. So, you can again just use a horizontal tool. Right now at this moment, we're at 60 pips average true range on the 4-hour time frame. But like I said, it's a range. That's why I like going on the daily time frame. See, 60 and 160 or 150. That's why I like going on the daily time frame, seeing what the current average true range is for the daily time frame, and I like to just divide by 2. But again, still, right now, if now the new reality is we have to trade the 4-hour time frame with a 75 pip stop loss. That's a decent amount. But as we're going to learn, and by studying the 3-chart setup, we're going to be always looking to enter on the 5-minute time frame. When we see a setup based on the higher time frame, we're going to enter on the lower time frame, and we're going to try to, again, still have our entries between 5 to 15 pips. I don't know if it's going to be that, but all we got to do is, again, focus on the charts, learn the different time frames, study the structure, look for trade opportunities, and see what presents itself. And based on all our learnings and all the lessons, we can, come up with a stop loss that is large enough to let the trade breathe, but small enough to manage our risk and not waste any of our funds unnecessarily, right?
Okay, so here we're looking at the 3-chart setup. In the following chapters to come, we're actually going to break down even more each time frame. So we're on the following chapters, we're going to go through the individual time frames a little bit in more detail. So the 3-chart setup, it's going to help us now that the average true range is higher, so there's more volatility, or there's more market movement. We're actually going to have more opportunities to look for trade opportunities. So it's a good thing, but it's going to involve us understanding. Like I said, in the next chapter, I'm going to go over the daily time frame. We need to be aware of the market direction. So here, The next chapter, I'm going to go over the daily time frame. But basically, I'm going to have you guys examine the daily time frame, jump over to the, what time frame is this? This is supposed to be the 1 hour. So then we can jump into the 1 hour. We can combine average true range. I'm going to remove this from the chart, but we will know more detail of every time frame, and we're going to study together. Maybe the 15-minute time frame. We're going to study actually every time frame. In the next lessons, I'm going to break down every time frame a little bit more detailed. But all I'm telling you right now is the average true range means that there's more volatility in the market, and that means that we're going to end up going on the lower time frame to look for trade opportunities. I want you guys to be able to spot right here. This would have been a good buy opportunity, and I want you guys to just buy and exit the trade here. Get in, get your money, get out. That's what I want to teach you guys. And it starts with the 3-chart setup. And so that's why I'm really excited to release our next lessons, because we're really going to teach you how to get into the market, get your money, and get out. And it's all, again, I want you to make sure you understand the basics, because it's all about fibs. It's all about fibs, right? And market structure. So that's why I keep emphasizing for you guys to, really understand the basics, because look, you can just place a trade here, take profit 3, get out, get your money right there. Bought here, take profit 1, 2, 3. This is, if you can do this all day, just, whatever schedule you have, whatever aligns with your schedule, if you're able to spot these trades, and now that the average true range is higher, then all that's telling us is that we have more opportunities to get in with the trend and get out and take our profit. And so that's what I want to teach you guys.
And the last thing I want to show you is,
if you were having troubles adding, say when we went to add this, the average true range here, average true range, if we selected this and it told us that we can't add anymore, because it depends on your account. I don't know how many EMAs you have added here, but these are indicators. So if you weren't able to add average true range here, it said, oh, you've added the maximum number of, all you got to do is delete one of these. So in the meantime, you can just delete, the EMA 200, and then you'll be able to apply the average true range. It's just another indicator. So if you had that problem, just delete one of them. Okay, so I hope you found that lesson to your advantage. In the following lessons, we're going to go through every time frame, and yeah, it sucks, everything that's happening in the world right now regarding the coronavirus, but I want you guys to know that this is the only industry or the only skill that's recession proof. When people are worried about losing their jobs, this skill with very little money down, like you don't really, with a $50 account, you can create an account that, gives you money for the rest of your life. And, when the markets are crashing, all we do is sell. When the market's going up, we buy. Forex, trading Forex or trading currency is different than trading like stocks. With stocks, you buy and you hold and you wait for it to go up in price. But currencies and Forex and cryptocurrency, and other assets like gold, everything, we're able to sell when the market's crashing and buy when the market's going up. So I hope you found this lesson informative, and I'll catch you in the next one. Thanks for watching.